As the world's two largest economies continue to compete for global influence, a new challenge has emerged. Could China dethrone the US dollar as the world's reserve currency? In this video, we delve into the potential implications of this shift and explore whether it's a real possibility or just a passing trend. Don't forget to click the first link in the description to get a chance to win a $100 gift card. Now on with the video. During their recent summit in Uzbekistan, members of the Shanghai Cooperation Organization (SCO), a regional organization led by China and Russia, have agreed on a roadmap for expanding trade in local currencies. This plan has been on the SCO's economic agenda for years and is in line with individual policies of its prominent members, such as Russia's attempts to cushion the impact of Western sanctions, China's deteriorating relations with the United States, India's use of non-dollar currencies in trade with Russia, and Iran's proposal for a single SCO currency. Chinese President Xi Jinping, while addressing the summit, proposed to address development deficits through regional integration by strengthening local currency settlements, cross-border payment and settlement systems, and promoting the establishment of an SCO development bank. This move reflects China's deep concerns about the vulnerability of its economy to US dollar hegemony and its desire to develop alternative systems to hedge against the risk of dollar dominance. However, Beijing is not currently attempting to make the yuan an internationalized currency, nor is it seeking to replace the dollar's dominance in the global system with the yuan. Instead, it is taking steps to make the yuan a regionally powerful currency through local institutions in China and regional intergovernmental organizations such as the SCO. Don't forget to subscribe to our channel and hit the notification bell to watch our latest videos as soon as they are released. China's goal is to increase the use of yuan in cross-border trade settlements and investment, reduce dependence on the dollar, minimize exchange risk and dollar liquidity shortage, and maintain access to global markets during geopolitical crises. Moreover, China's de-dollarization initiatives are not only implemented by the central government in Beijing but also by local governments and financial institutions. For instance, the Sino-Russian Financial Alliance was established by China's Harbin Bank and Russia's Sberbank in October 2015 as a non-profit cross-border financial cooperation organization with 35 initial members, including 18 Chinese and 17 Russian institutions. The alliance's primary objective is to establish an efficient mechanism to support Sino-Russian trade, facilitate comprehensive bilateral financial cooperation, and promote the use of local currencies in bilateral settlements. All in all, the SCO's agreement on the roadmap for using local currencies in trade and developing alternative payment and settlement systems reflects the member countries' growing concerns about the risks of US dollar dependence and their desire to create alternative systems to reduce these risks. Comment $, if you would like us to make more videos like this in the future. The recent imposition of US sanctions on Russian financial institutions has led to the development of alternative payment and settlement mechanisms. Small Chinese banks that do not have much exposure to the dollar-based global financial system are well suited to practice these mechanisms. By working with Russian entities, they can become fluent in implementing de-dollarization strategies that facilitate sanction evasion. For example, Harbin Bank, a direct participant in China's cross-border interbank payment system CIPS, is a strong candidate for serving as the hub for cross-border yuan settlements for Russian banks and companies. While systematically important Chinese banks immediately cease processing transactions with Russian entities following the US government's announcement of sanctions, small and medium-sized banks in the Sino-Russian Financial Alliance could help Russian entities evade sanctions using alternative payment and settlement infrastructures such as CIPS or cash. Supplying Russia with yuan in cash, bile, and transportation is another mechanism that several small banks in Heilongjiang province have developed since 2018. Don't forget to like this video if you've watched it till now, as it inspires us to make content like this. China's interest in using the Shanghai Cooperation Organization (SCO) framework to promote the use of local currency for bilateral settlements started before the Belt and Road Initiative was launched in 2013. The SCO, initially established in 2002 as a 6-member regional security cooperation organization, has quietly grown into a non-Western regional geo-economic bloc that strives to gain a higher level of collective self-sufficiency and strengthen self-defense against global financial and geopolitical turmoil. Since China's Belt and Road Initiative launched in 2013, China has been promoting the Infrastructure Investment Program in SCO member states. China has been increasing its economic ties with members of the Shanghai Cooperation Organization (SCO) since 2011 by signing bilateral currency swap agreements. These agreements allow SCO members to access Yuan liquidity at lower interest rates in exchange for their own currency as collateral, thus increasing their purchasing power for Chinese goods through Yuan loans. Although not yet signed, China and Kyrgyzstan have taken steps towards a currency swap agreement. While the use of local currency in cross-border settlements between China and other SCO members has been limited, the proportion has been increasing due to China's push for Yuan internationalization in the region. To further facilitate payment and settlement cooperation, the SCO Interbank Consortium (SCO-IBC) was created in 2005. The SCO-IBC coordinates funding and banking services for state-sponsored investment projects and has 8 member banks comprising development banks and policy financing institutions in member states, with the China Development Bank as the largest loan provider. The SCO-IBC has also proposed the creation of the SCO Development Fund and Development Bank to bankroll projects in member states and advance financial cooperation. Since 2018, the China Development Bank has provided special loans to the SCO-IBC equivalent to 30 billion yuan, $4.3 billion, and cumulatively provided $14.6 billion in loans, including 25.1 billion in yuan. The possibility of an SCO development bank suggests a path towards de-dollarization, building formal institutions to promote the use of local currencies in trade settlement and development financing. Members of the SCO and BRICS bloc, which comprises Brazil, Russia, India, China, and South Africa, have aligned towards de-dollarization, expanding bilateral currency swaps, and promoting the use of local currencies in trade and development finance. A closer alignment between BRICS and the SCO towards de-dollarization is taking place, and the SCO has been working towards a gradual transition to using local currencies for settlements, with proposed partnerships with the Asian Infrastructure Investment Bank, New Development Bank, and Silk Road Fund to unlock investment potential. China has been actively supporting the Astana International Financial Center (AIFC) established by the Kazakhstan government in 2018 as a financial hub for Central Asia, Europe, the Middle East, and beyond. The Chinese financial institution's support has encouraged Kazakhstan's aspirations to develop the AIFC as an arbitration center for Chinese and Russian company contracts. However, the limited financial market in Kazakhstan has hindered these ambitions. The Chinese region of Xinjiang has already emerged as a leading cross-border settlement center between China and Central Asia, which challenges the AIFC's status as a regional financial hub. China has been advancing the use of local currencies in trade settlement and finance through the BRICS platform and other regional multilateral institutions in the Asia-Pacific region. The Shanghai Cooperation Organization (SCO) is likely to expand and include new members that have shared interests with existing members in pursuing local currencies in trade and investment and developing alternative payment and settlement systems. The SCO is embracing major natural resource exporters that either face U.S. sanctions or are unhappy about the U.S. hegemonic power and the dollar's dominance. The U.S. government's excessive use of sanctions risks isolating China and other SCO members, leading them to collectively pursue alternative currencies for trade and investment within the bloc. So that's it today for you guys. And don't forget to click the first link in the description to get a chance to win a $100 gift card. Thanks all. Bye.